era when there was a sudden spike in merchant acquisition. So we see this sort of parallel in both a threat and an opportunity, and that's why I think it's really interesting to have Arpit from Signzy talk to us about how industry is disrupting remote KYC, remote onboarding, especially in an industry that's seeing transaction volumes overall drop, is seeing margins drop. Yes, there's a temporary spike in utility and essentials payment, but overall there's a drop. It's an industry that works on wafer thin margins, works on off the bat of government policies like zero MDR. So it's really interesting to see how the digital payment industry will capitalize on this moment. And so, Arpit, I'm going to take it over to you now. Can you tell us a little bit about the Signzy value proposition, Signzy's products, and how Signzy is becoming more relevant in a post-COVID India?
Yeah, hi. Thanks, Aparajita, and thanks, Arpit, for the introduction. I think Arpit had rightly put when he said it. So, what we are trying to solve for, and what we have been doing till now, is trying to convert the current manual physical processes into digital remote processes for onboarding and KYC. And when we look at it, everyone sees the front end, but there's a huge, massive back end also that is powering a lot of this onboarding. Which, so even if you are today onboarding through a digital app, you may not see it, but there's a huge back office that is working, and which also creates a physical touch point, maybe not to the customer, but to your KYC process. So what we've been trying to do is completely digitize that process and make it as remote as possible from a point of view, not only from the front end, but also from the back end. Of course, this is something which we have been doing for a very long time, not something which has come up now because of COVID, but because of COVID, suddenly we are seeing a huge heightened demand from customers which were earlier reluctant. And I think there's one joke going around, right? That number one driver for digital transformation in organizations is not no longer their CTO or CEO. That's COVID. So that's true. That's seriously true. Like 3 years of transformation is now getting crunched up and is happening in 3 months within the organization. So we are definitely seeing huge demand from very large institutions which were earlier because of their legacy and inertia were not moving, as suddenly started to look at it and are looking to implement these transformation technologies.
Yeah, it's interesting when you speak about customers, and I also like to get your thoughts on merchant onboarding. Now, merchant onboarding years ago used to take 3-4 days. It was a paper-based, more than 3-4 days. It used to take a week. It was a paper-based process. The merchant would come with one KYC document, then another KYC document. And how do you feel in a post-COVID world, you'll see merchant onboarding, especially in terms of digitizing the entire process of onboarding? And secondly, now we're seeing most spends happen at mom and pop kirana stores. So it's these stores which were most cash savvy and least tech savvy. Do you think that we'll see a change in acquirers acquiring the smaller merchants, terminalizing the kirana stores more now? And do you think that we'll see aggregators digitizing the entire onboarding process for merchants better?
Yeah, I think there are multiple questions in that, and some of them are not policy driven. They're driven through basic economics as well. So maybe I'll take it separately as questions. So when it comes to merchant onboarding, yes, it was always a painful process. Even today is for a lot of financial institutions. But I think what has been achieved in the last 2 years is pretty much you can make it very, very seamless for the merchant. You can do it within minutes, if not, if not seconds like individual, but at least you can make it as real time as possible. So that definitely is already solved. May take time to scale because I do believe compliance and operations team need the comfort before they scale anything. And I'm talking about across organizations. But definitely that is something which has been solved. And you will see the way Aadhaar and online onboarding became like a norm for individuals. It will pretty much become norm for businesses as well in the next 1.5 years. I think because to be honest, a lot of problems have been solved by the regulator now, and we don't see it because it doesn't get as promoted and it doesn't reach the Supreme Court of India. So you don't get it in the your front pages and in your news. But government has systematically stalled for e-stamping, has systematically solved for digital signatures, has systematically solved for business validations, and over a period of time, a lot of these services are now available by the government. So when you stitch all of them together, you can do a lot of wonders which are happening on the ground, and you will see them scaling. I think the second question is, will you see it happen, whether mom and pop stores will get digitized? I don't think that's a question of technology. Technologically, it is possible. You can do it remotely. You can do it in as less time as possible with as minimum cost. I think there are two questions out of it. One is the risk of onboarding a mom and pop store, especially with the amount of data that may be available to you. And the second is, I think, the economic viability of doing it, which is again taking into account the risk that may be associated, which is that the overall transaction value may not be as high as the cost of the risk that you take. So I do believe technologically yes, but economically industries will figure out what model works for them.
Yeah. And also, when it comes to remote KYC for digital payments players specifically, right now the only viable ways that I can think of that a digital payment product can be sold to you as a customer is if you're able to do an Aadhaar-based KYC, if you're able to do like an OTP or a video-based KYC. Do you think that regulators need to do more to encourage other forms of remote KYC through other officially verified documents like a DL or an election card? And how do you think industry can enable that?
So that's a good point. I do feel that the regulations which came out by RBI were restrictive. They were very, very rule based, which is never the trend or not has been a traditional trend by any regulator. Generally, when you come out with guidelines, they are more risk based approach. But RBI took a very, very stringent rule based approach, which limited the avenues for a bank to decide what they want to do. But I do think that will undergo a change, and especially because SEBI has come out with their own version of video KYC. And the SEBI's version of video KYC is definitely more flexible in its approach, allows multiple documents, including voter ID, passport, any OVD for that matter. And it allows a good framework to validate them online, to get them submitted online. So I do believe because regulators eventually get influenced by each other, I do feel because of SEBI's video KYC guideline, you may see RBI in some months also changing their stand and coming out with more risk-based approach, allowing the financial institution to decide how they want to do their video KYC as long as the basic framework is met.
Can you tell us more about the Signzy's video KYC product? I find it really interesting the way video KYC has been introduced. It's a highly regulated form of doing KYC. There's geotagging and there's an audit. How is Signzy solving for all of those prescriptive regulations in video KYC?
Yeah, so I think we were, and I think somebody spoke out in the introduction. So way back in 2016, when we started the whole company and we were trying to solve for KYC, we were thinking about a remote onboarding from day one. We were never solving for a physical KYC. We were not trying to solve for Aadhaar KYC. From day one, we were trying to solve for a remote onboarding of how do you onboard a customer online digitally. We were also thinking about how do you do it without involving a and we said that eventually it is about certain based checks that you do when you meet a person. And if you can replicate them through AI, you can pretty much replicate that experience or that entire process of onboarding a particular individual or a business. And that is when in 2016 came out with our own video onboarding. Obviously, none of the financial institutions adopted it back then because it was something which was not regulated. It was something that RBI was not okay with. But SEBI kind of accepted it, was okay with some form of video onboardings. And since the last 2 years, we have been onboarding a lot of customers through our AMCs, which are SEBI enlisted through our video onboarding platform. And today we do almost 150,000 video onboardings a month. So we already have solved for most of these problems. In fact, RBI, of course, is not expected to know enough technology. But for example, we have built technologies to even check if somebody is trying to use a VPN to enter your system. Because while you can geotag somebody, but using a VPN, I can pretty much choose any location in the world I want, right? Even sitting from Pakistan, I can show my IP in India. So we have in fact put even more checks and balances like that in place to ensure that that is a very, very secure video communication that comes to you. And then eventually it is about how seamless the workflow you can create. It is about how good an experience you can do for the users. But from a security point of view, I think there's a lot of technology which has been built today available that can be used to make these onboardings at least as secure, if not more secure than your physical onboardings.
Yeah. So physical onboarding, I've always thought that if I'm signing a photocopy of my driving license, even if I scribble a purpose limitation, and I've given that to someone, to a bank executive, or to a runner, that can lead to an incredible amount of fraud on its own as well. So it's not like you're looking at a fraud-free measure and a video KYC measure or a digital measure which is high risk or high fraud. I'm curious to know. Well, it's not. I mean, selfie-based KYC isn't something that the RBI has taken to yet. And selfie-based KYC is obviously not as good as video KYC. It's far more difficult to do a liveliness test, etc. But do you think selfie-based KYC, where I click a picture of myself, click a picture of my OVD, do you think that's something that can come up and can have equal fraud mitigation measures or somewhat equal fraud mitigation measures as video KYC?
So at Signzy, we don't recommend selfie-based KYC. We feel that that is actually not very secure. There are enough ways to hack a selfie-based KYC, and basically you can create a scenario which looks like a real scenario. What we do recommend is a short video of the person. So instead of clicking a selfie, you do like a 10-second video, and within that 10-second video, there'll be multiple things that you'll be asked to do, etc. So while you may not need the human at the end, but videos in general, a short video is much better, both in terms of the security it provides at the time of onboarding. Secondly, also if something wrong happens, you have a much better audit proof. So you'll have the exact 10-second video with you instead of just an image which comes to your system. So hence you have a much better audit proof of a uh, liveliness being present. And hence we recommend like a 5-10 second video with all the liveliness measures versus like a selfie.
A selfie
I'm
of
so sorry, Aparajita, just a very small thing. Could you also briefly touch upon the use of artificial intelligence and facial recognition in the KYC products that you provide? Just very briefly.
Yeah, especially I think this becomes extremely relevant in the automated one, the one which does not have a human, especially the SEBI video KYC. It is still relevant in RBI, but you have a human there. So in our automated video KYC, I think your technology or your AI has to match the face to the ID face. It has to make sure that you are a live person in front of the camera through random gestures, movements, random questions, answers. It also, we have, for example, built things like coefficient which checks each frame. So I do a ratio between frames to arrive at if you would have stitched 2 frames, which can be used for a spoofing attack, which means that at the start of the video, there may be for a split second a different frame, and then I stitch some video in between. So we do a coefficient across frames to arrive at what is the difference or variations. This is again a measure to check for that is somebody trying to spoof my system. Then we collect metadata. So like every time you have videos or images as files, apart from what you can visually see, these files inside have metadata of their own, like date, timestamp, device signatures from which they are collected or clicked. So we also retrieve all this metadata and then match it against the onboarding profile to say that whether this, so for example, my metadata may say this is an Android phone, whereas my actual device may be an iPhone, and I'm making it very simplistic, but the idea is that metadata also reveals a lot of things. And then you have technology today which can detect photoshops on images. If I Photoshop something and upload, you can, there's a heat signature map that Photoshop creates. So you can use that e-signature map to detect Photoshop on an image as well for forgery checks. So there is a lot which is available. Of course, in the case of RBI video onboarding, it may not be so relevant because you have a bank agent, which in any case needs to approve it. But for other onboardings like SEBI and maybe RBI will also come out with its own tomorrow, it makes things very, very secure.
Yeah, but right now it has to be a human being who's a bank official at the other end who's checking that, who's doing a liveliness test, who's asking you random questions. Tell me, all of these solutions that Signzy has, that other players in the market have, how do they cater to someone who doesn't have a smartphone, or to someone who is not as tech savvy in a tier 2 or tier 3 city? How do you cater to that user?
Yeah, so I think there are two different questions again, right? One is if somebody doesn't have a smartphone, the answer is very simple: it doesn't work. Any of these technologies would require a basic smartphone, and smartphone may be a vague term, but what I mean is that you can't do it on a feature phone. There is no way you can do these things on a feature phone. So smartphone is basic. Of course, anyone having a feature phone is obviously removed from that area of people that you can do onboarding for. Not to take away that any person having a feature phone can always use friend's mobile, or they can use someone else's device to do it, but a feature phone cannot do it. The second is, I think, tier 2 and tier 3, and I think there's a lot of lack, I do believe, for a lot of us living in urban cities to understand the amount of technology adoption that has happened within rural India. So when we do a lot of these onboardings today, video onboardings, we do it from very, very remote towns. And the data connectivity and the way you have to create technology, that it has to work on very low bandwidth connectivity. So that is one thing you need to engineer for, that it has to work in a very low bandwidth environment, because the one problem is low bandwidth. So people have phones which can do this, but the overall bandwidth is not good. That is one thing you need to engineer for. But
the big challenge for your video interaction.
For your video interaction, yes. But you have enough. But you have enough 3G these days, and even 2G it works. So you have enough data. I do believe in tier 2, tier 3. Like today, we receive video files which are coming from farms. So people are doing their onboarding, and you can see that they're sitting in the middle of their farm and onboarding onto your system. So definitely the connectivity or adoption of technology has reached like a hinterlands of India by whatever that the government has done in the last 6-7 years.
Yeah, that's really heartening to hear. But even when I go to a small merchant and I want to pay, even when it's not a remote payment, I don't want to handle cash. I think most people will be averse to handling cash because it's like a door handle. It's been touched by many, many hands, and it's a high carrier of the virus. I think even NPCI has come out and said many, many things about stepping away from cash, even if you're making a point of sale transaction. So how do you think point of sale touchless transactions or contactless payments are going to take in a post-COVID world?
Yeah, I think that is going to be one big thing which is going to come out, and I think that is more because of behavior changes. That what we are already noticing, and the stats is that the contactless payment, which were earlier allowed in certain systems, have already started seeing an increase. So, for example, in India, you were already allowed to do a tap on pay, right? You could do a contactless card up to a limit of 2,000. RBI has just come out and increased that limit to any limit as long as you put in the OTP. You also have systems like tap on phone, which were there, and the data that was released by Mastercard, they are saying that they are already globally seeing a very high increase in tap payments, where you are not touching your card to the device at all. While the ad is going to show that you have to tap, but actually you don't have to tap. You can keep it away from the surface. So there can always be a distance between the surface. So the data which is coming out from Mastercard is that the payments are happening in POS now. Wherever it's allowed, it is actually contactless payments. In India, of course, we did not have good adoption of POS machines which could take contactless. They had started happening, but of course, with like a merchant base like India, it takes time to adopt any new technology. But I think what we'll definitely see in the coming year is that more and more merchants will you will be adopting contactless POS as a necessity, because more and more people will not want to touch their cards to the POS device, and that is something that's a clear trend we are seeing. In fact, today there was a very big debate on AEPS, because in AEPS, to make the payment transaction, you have to actually touch your thumb,
Yeah.
fingerprint, and that is a very high contact point. And while they are trying to sanitize and make sure that hand is sanitized before touching, but you don't know if the last person sanitized their hand or not, right? So, so I think there's a lot of now debate happening within APS to enable it iris based. So I think the second trend we'll see is that, and I think regulators will see this push, that where you are seeing payment authentication through methods which are completely contactless, like biometrics, which are not requiring touch, which leaves two biometrics, iris and face. There are two biometrics which do not require touch at all. And I think we will see a trend, like China has already shown authentication through face, but I think you'll see more and more trend of people pushing contactless payment at POS, which means not only card being contactless, but even your authentication being completely contactless.
Okay. So tell me, what would, if you were to ask the regulator, if you were given 3 wishes for remote onboarding, for remote KYC, or to push digital payments in general, what would your 3 wishes to the regulator be, specifically to the RBI?
I think one is obvious. I mean, I don't know if RBI is the right body, but one is obvious, like remove the zero MDR. I think that's a no-brainer, right? I mean, that's a complete no-brainer. I don't know how that policy came in, where did it come from, but MDR is a market, and it should be regulated by the market. So one is clear, right? I mean, let the market decide the pricing. Eventually, I think that is the greatest driver for adoption of digital payments. So one is, I think I clearly feel that if we remove MDR, that's most of the battle won. It will then put enough money in the system to innovate, to build infrastructure to make adoption happen. So I think clearly first that MDR issue needs to be solved. I think the other two will be more policy and more regulatory in nature, where I think RBI has to solve for the micro payments dispute resolution. And while this may not look like a big issue, but eventually, if you look at payment systems globally, they work on trust. Cash eventually you get in your hand, but payment system, you trust that your payment is either being made. So I don't know if all of us have seen that enough where payments fail, or there are transactions on your cards which you have not done, and these are the things which eventually lead to a loss of trust. So, and that has been constantly happening in micropayment. Like I might follow up with my bank if 10,000 has been deducted from my account, but if 100 rupees has been deducted from my account, I don't even want to follow up. So the settlement mechanism that RBI has today for disputes is very, very bad. No one will want to go through it for micropayments. So RBI needs to come out with a much better, simpler way of solving my payment disputes with my provider, whether it's as the issuer or acquirer. And I think that can definitely bring a lot more people and bring that trust in the system. For example, US has a very simple policy of ensuring each payment transaction. And as a consumer, as soon as I raise a dispute, I get paid, no question asked. RBI needs to figure out what they have to do, but if you have to solve for it, you will have to make sure that as a customer, I do not get cheated of my money, even if it's that's $10. I do not get cheated of my money and wrongly. And it has happened to me multiple times. I did not have the energy to follow up, and I'm sure it happened. And I'm in the industry. I know exactly what I need to do, but I just didn't feel it was the right time to spend to recover 100 rupees. And I'm sure everyone outside the industry like completely lose trust when something happens. So I definitely feel RBI needs to solve for that. And third thing, which I think RBI has already solved for now, to be honest, but banks in their own vision and views sometimes are. I always believe that bank compliance team are actually more conservative than the regulator themselves. So, for example, the RBI has already come out with merchant onboarding norms, and it says it's risk-based, and banks can frame their own board policy. But eventually, what all bank will end up framing is the same what RBI prescribes for account openings, and that is a very conservative view. So I think RBI has solved for it. To be honest, they've said that for merchant you can do your risk-based onboarding, which means you can pretty much follow any KYC rule that you want as long as your risk is protected. But yeah, banks, I think their bank compliance team needs to be much better, and they need to think through and make risk-based. So if I'm, to your point, onboarding a merchant who's going to do a payment of less than a lakh a month, I maybe don't want all the big procedures to onboard them. I can have smaller. So I think risk-based approach is important.
Just to step away, actually, I really like the way you put trust as the primary product that a payment company is selling. I think there are three things actually. There's trust, there's seamlessness, and there's openness. So nothing is as open as cash. Everyone accepts cash. So the moment my Kirana store doesn't accept an Amex or doesn't accept a Visa or doesn't accept my particular UPI QR code, I'm going back to cash as a means of paying them. It's also seamlessness. So it's players like you who are making, when I onboard to pay, nobody wants to pay. Nobody wants a payment experience. You want zero payment experience. So when I onboard to make a digital payment, I want the video KYC to go through seamlessly. The third interesting point I think you made was about MDR and revenue models. I think this is where the money is metaphorically in the entire conversation about how digital payment sector will be disrupted post-COVID. Like I was saying initially, transaction volumes, they will take a huge blow. And an industry which works on a few basis points, and in some cases, in some payment options, zero MDR, for them, low transactions is an existential threat. Then you have, like you rightly pointed out, chargebacks that might spike, especially for merchants who made promises before COVID hit. Now they can't fulfill those promises. And now you have massive chargebacks on a payment aggregator's sheet. All of this is happening in the backdrop of a zero MDR. It's also happening in the backdrop of acquirers needing to acquire the mom and pop shop, for which it doesn't make a great deal of sense to terminalize them with an expensive cost, teach them a bunch of things, go through that journey for microtransactions. How do you think, in a post-COVID world, how do you think revenue models and trust models for payment players will get disrupted?
Yeah. So yeah, I think you made very good points, Aparajita, and I think one of the things that people do not understand in the acquisition, and people I think do understand, but there has been just such a uh, big burst of so many acquirers and payment facilitators and aggregators in the market. I think to chase numbers, people have lost that initial that it's a risk business. Eventually, acquiring is a risk business. You are taking risk of chargebacks. And what people are now realizing when COVID has hit, your entire travel industry revenue is almost zero. Travel, e-commerce, online shopping, etc. Once that revenue is almost zero, you're realizing now chargebacks is something that you need to actually pay back. Till now, chargebacks were just a reconciled statement because you were to, in any case, pay, let's say, 100 to the merchant, and you would just reconcile the chargeback and pay the remaining balance. But now chargeback is an actual money that you'll have to take out from your account and pay back to the issuer bank. And I think
it will automatically get deducted. In fact, the issuer bank is not going to be polite enough to ask you. They'll just automatically deduct the nodal accounts of the payment aggregators, and you have this massive liability hanging on. And I mean, I can tell you because I've drafted those agreements. We have incredibly harsh, onerous security deposit. We'll withhold your settlement if there is a high chargeback risk, etc. But ultimately, you're absolutely correct. Payment aggregators aren't in the business of settlement. They're in the business of hedging risk. So, I mean, I completely agree with you that chargeback is going to become a very big, it was a theoretical risk earlier, is now going to become a real and present danger.
Yeah. I think one thing that in this entire frenzy of onboarding a million merchants in a year, people were just doing it basis to OVDs. Like, people, some of the players in the market onboard an entire merchant just basis PAN and Aadhaar. And I didn't realize there's a huge credit risk to onboarding a merchant in terms of chargeback, which nobody counted earlier. And I think one of the things that definitely is going to change is that people are going to take an approach of actually doing a risk assessment of a merchant before their onboarding. So we possibly might see that people are not chasing these micro merchants. People would be chasing the merchants, one which can give you enough revenue and are safer bets. So maybe revenue calls versus chasing maybe, and I think these are all investor numbers. To be honest, it made no sense to onboard some of these merchants, which is happening. To be honest, from what I know, there were a lot of frauds happening where people and acquirers were onboarding the same merchant twice by two PAN numbers, and not nothing to do with the acquirer, because acquirer in the all earnest sense was trying to implement the right policy. But because there was so much pressure to meet these merchant numbers, the salespeople on the ground will end up onboarding the same merchant twice by two different PAN cards or two different Aadhaar cards, etc. And I do believe now people would become, even in payment business, which is always about numbers and not profits, but you'll suddenly see that shift where people start pushing payment business also about profits and not just these transactional numbers that we're talking about. That basis point eventually has to convert to profits and not your top line. So that I definitely think will be a huge change in the way aggregators and acquirers will look at the market. And I think the second definitely I see is that people will start doing better risk assessment of merchant, which was not happening at all. No one was doing it, and it's not that if you were not doing, almost no one, like other than maybe select people, no one was doing any kind of credit assessment of that merchant before. So the entire underwriting process, which should happen, was hardly happening for these micro merchants. So and while all of them were getting onboarded through UPI mechanisms, through different systems, but for example, 1.3 billion people in India have Aadhaar, but doesn't mean 1.3 billion people in India are not are all okay to be transacted with. There are frauds. There is people who may tomorrow not be good merchants to be onboard. So I definitely feel risk will become an important criteria for in the merchant business, which it was not till today at least.
Yeah, and I think it's also going to payment companies who are already looking at cross-selling of the products using payments data, and now we'll see more and more of it happening. So I completely agree. I think trust models will get completely disrupted now. If a merchant shows any slightest risk of chargeback, I do think that payment aggregators will pull the plug on that merchant pretty quickly. But I also think that now payment aggregators will look to using payment data to say sell a sachet size loan or a sachet size insurance, and that kind of sort of dovetail into other selling other products, because your main business, your payment aggregation business, isn't really making that kind of revenue. But this brings me to fraud. Now, more customer fraud, not just merchant fraud. Now, more people who adopt digital payments, frauds will spike, especially if these are adopted by people who aren't particularly tech savvy. I mean, you'll know this. A lot of people we know who are otherwise tech literate would share their OTP, would share their net banking password. It's still a very, very prevalent practice. What do you think industry can do? What do you think regulators can do to not see digital payments spike and fraud spike exponentially in tandem?
Yeah, I think that's a very valid point. And to be honest, India has had a very bad stand to this issue till today. Even the judgments, which I mean, they're not judgment, but the ombudsman always puts the liability on the customer. So if your OTP has been given, like there was a very famous case in ATM where the OTP was entered, and it was not entered by the person, but the stand that was taken by the tribunal at that point of time was that that's as long as the OTP is confirmed, the bank is not liable, right? And I think that is the challenge, that a lot of, so while you can go and file an FIR and the police can do its job, and in India how legal cases are, they take years and years, but the bank is not responsible to return that money. And from a bank's point of view, a bank doesn't know whether that's the right transaction or wrong transaction. And I think that definitely needs to be solved if more and more people who are not very literate about digital payments come into the system. One is obviously they are at risk because they may not know what to secure, what not to secure. Secondly, fraudsters are also getting smarter by the day, and they will find new avenues to fraud. Like other countries which have solved for this is by insurance, right? As I talk about US, they have insurance, but as soon as you have insurance, it will increase the cost of transaction, and India looks to do zero MDR. And I think that is where the anomaly is. Like eventually we come to the same question of zero MDR, that even if as a business I need to spend, and even if I need to give insurance to ensure my payment transactions and my customers, there needs to be enough coming out of my MDR or my core business of payments. And I think that is a very wrong, hard stance taken by the government of the day. They need to allow people to make money on MDR, which can then be better spent in insurance, which can then be better spent in bringing trust to the system, which may eventually increase people entering in the digital system. So I think having zero MDR actually is eventually negatively impacting the growth of this and I do believe the more money aggregators make, I think they will invest more in making people feel more secure and comfortable with their payment systems.
And I also think that and security and fraud mitigation are not always at odds. So, for instance, when RBI introduced OTP, people started trusting their cards more and started using their cards more, especially for e-com.
Yes.
And it was the same time I remember that e-com was really coming up in India. So e-com rolled off the back that the regulator had created rolled off the back of the trust that the regulator had created in card-based transactions. Even I would be scared to use cards if there was absolutely zero 2FA. Of course, the mode of 2FA OTP, that's another question altogether. But do you think that there are any such happy marriages between creating a fraud detection mechanism and still not just creating a dip in consumer transactions, but creating a spike in consumer transactions because consumers start trusting that digital payment product?
Yeah, I mean, I think that is. I do somehow feel that there has been a lot of negative impact. While friction, you need to remove friction in payments, but I do feel that trust is what brings people to digital payments to start with. And I'll take my own example also. I necessarily use an HDFC Bank credit card only. I do not use any other credit card because I do believe that they have the best security in place. And a lot of people, when they're making that choice, they do not think about these things because maybe that much awareness is not there. But eventually, when that awareness comes, you will always choose for payments the best secure. And I think this COVID has made people realize about the risk of payment, right? Eventually, once you start realizing that payment you may never get back your money, I think that's where you start realizing that the financial industry is actually about protecting risk, not about giving you a great UI experience. That's something which is coming, but more at core, you first need to protect your risk, and I think that's true with payment systems also. They will need to, for example, I'll give you one of the aggregators I used to use. I had a micro payment issue; it did not get resolved. I stopped using them. And it may look like an individual issue, but once it starts, because we just seen maybe 2-3 years of most fintechs, we just seen a 2-3 year cycle. But when you will see a 10-year cycle of a payment system, you realize if I don't trust that payment system, I'll stop using it. And over a 10 years, you'll have a lot of people who will be excluded from that payment system. So eventually, those payment systems will survive, which are able to keep your trust, and that is how it has happened globally. In the last 30-40 years, multiple payment systems have come. Only credit cards, debit cards have remained because MasterCard, Visa to their credit, whether we like them, we don't like them. They have created so many settlement mechanisms, so many compliance that they secure your payment overall through your bank's network, through creating that mechanism. And hence they have survived over such a long period of time. So eventually, over a long period of time, only those payment methods will survive which are able to protect your risk of payment. And I think therefore every institution which is today venturing into payment system will need to invest equally in that in a long-term basis. And we need to stop chasing these trying to onboard 10 million customers in a year kind of a matrix. We need to build our systems for the next 10 years. We don't need to build them to get investment at the end of the year.
So, Arpit, I'll move it to my colleague Arpit if he has any more questions to you, and then we'll throw it open to the audience.
Sure. So I'll just come direct to perhaps what is the biggest nightmare for digital payments, which is use of cash in India, and how there's the adage that cash is king. Now there have been certain innovations around cash withdrawal as well, which have been promoted by the government. So we have micro ATMs, we have cash withdrawal through Aadhaar-enabled payment systems, AEPS. NPCI has recently allowed withdrawal of cash through use of UPI handles. And maybe it's also necessary in a country like India because internet penetration is still building up. Digital awareness is low in a lot of areas. What are your thoughts on this clash between promotion of digital payments but promotion of cash at the same time?
I yeah, I think there are two different aspects to it. One is pure infrastructure. So if you look at digital payment, no matter what system you use, the basic you need is a data network. No matter what system you use, the basic is a data network. There are parts of this country which do not have a data network. No matter how remote and no matter how small or minuscule that size may be, but there are still places in this country, even your POS works on a basic data network. If you do not have a data network, none of your systems work. So hence, in any case, cash, you cannot do away with cash. It will solve a problem wherever you do not have infrastructure to make digital payments. I think the second and the more point, which is I think clearly missed all the time by government, is even if you have the entire infrastructure to make a digital payment, there is not enough incentive for me to switch from cash to digital payment because I need to pay tax uh, or when I receive money through digital means because that necessarily hits my bank account. I can end up saving a lot of tax if I pay through cash. Whether it's illegal, that's the second point. But there is a behavior to save and conserve tax, and that cannot be done if you are paying through digital. I think if the government really wants to promote digital, the first thing that they may or should do is to remove GST. Right? You are trying to make MDR, which is 2% zero, but you want to charge 18%. So definitely I'm not going to accept digital payment, right? Because I have to pay additionally 18% of GST, which I can otherwise save, and possibly also an income tax. And hence, I think while no matter how seamless the payment becomes, it's not about seamless or cost of a transaction. There is a huge cost of, or in fact, there's a huge benefit of accepting cash, whether legal or not legal, but which you cannot, you cannot just become blind to it. It is the reality of this country.
Sure. Fair enough. Just I think we'll do a quick concluding question. So one, what more do you think does the industry or the regulator needs to do to promote digital payments? Maybe just one or two specific points that you feel can be done in the coming months. And second, what are the opportunities that you see for businesses like Signzy in the coming months, especially in this COVID-19 scenario?
Yeah, I think we spoke about the first two in Aparajita's point, right? As I said, the government needs to solve for settlement. I think it's the huge problem, and to be honest, it's been solved really well in a lot of countries. And I keep taking US example, and why I take US example is US today has the highest penetration of digital payment at that scale. Like even Australia has, but then Australia has a population of 25 million people. At a population of 300 million people, US has one of the best digital payment ecosystem, and we need to learn from that. And I think one of the things that they've done well is settlement mechanisms, which helps people create trust. So I definitely feel settlement is one of the things, and other, as I said, is MDR. I think they need to solve for these two, especially post COVID. They need to, like US has given a multi-billion-dollar incentive to businesses. I think the least this government can do, if, and I understand we are not a rich government like US or Europe, but the least we can do is allow businesses to make their own money and not have policies which are against making profits, because today people are making losses and government is not there to protect them for the losses. So if you're not there to protect me from my loss as a payment company, then you should not also have any regulation to stop me from making my profit. And I think the government should let the market run on its own without trying to, strong arm it.
Sure. Great. All right. Thank you so much, Arpit. I think we can take some questions from the audience. We have about 10 minutes. So why don't we first go to so Satya Gupta has a question about about use of electronic signature for KYC purposes and how successful that has been.
Yeah, I mean, I think it's being in use. Like today, we do, as I said, 150,000 customers a month. Um, I think the problem more to solve is e-stamp. Electronic signature, I think, is already a solved problem. It is more whether you want to use it or not. A lot of organizations do, a lot of organizations don't. But I think the larger problem is e-stamping. How do you stamp? Which I think now government is solving. At least multiple states now are allowing it. So should be solved very quickly. I do see every technology has an adoption time. E-stamp possibly has a time around 2 years of adoption. Aadhaar took 10 years. So each time will I think take around next 2 years, but in next 2 years I think we'll have it will become like a norm.
Sure, sure. We have a second question from Arun Kumar, where he's asked if Signzy has any plans of digitization beyond onboarding of customers, and whether you plan to use digital electronic signature for processing insurance claims or any other products that you're looking at.
Yeah, you can pretty much use electronic signature for anything, right? Even today we have our electronic signature which are being used for loan agreement, which is beyond onboarding. People are using it for re-signing the loan agreements after onboarding processes. People are using electronic signature in something called auto contracting. Is not known very well in the onboarding industry, but auto contracting is when I'm trying to, after onboarding, sign multiple contracts beyond a point of time. So even today, there are multiple use cases for electronic signature across industries. Insurance is one of them, something which is prevalent already. May not be very known or visible, but it's already there. But again, like anything else, you need to solve for e-stamping, which may be different from one scenario to other scenario.
All right. All right. We also have another question on whether Signzy or generally if there's any technology for onboarding of non-individuals, so corporates or entities like trusts, proprietorships, and companies. Is there a separate process for that?
Yeah, there's a different process, but it is digital today. A lot of financial institutions are digitally onboarding merchants, which are non-individuals, even today, in a very high number as well. But of course, it is not as simple and straightforward the way individual is. It's a slightly more complicated process, but it is there in place. A lot of our customers today use us for onboarding businesses which are sole private limited digitally.
All right. We also have another question from Mr. Kapil Chaudhary, which is on which blockchain applications and protocols do you see getting more embedded in India? I'm guessing this is in the context of being used in digital payments or in onboarding or authorization processes.
So yeah, that's an interesting question. One is blockchain is obviously a very abused term. So maybe
emerging technology is generally like a cool term to throw around.
Yeah, it's a very cool. Yeah. So let's narrow it down, right? I feel there are two interesting technologies within blockchain. One is distributed ledger, and second is hash protocols, which are like sub technologies within the entire blockchain network. I think there's a lot of different people who are trying to promote their distributed ledger and protocol of the distributed ledger, and always the question is that whose will get adopted. I don't think that in any case anyone is going to get adopted. It is going to be the way payments happen. It has to be an open loop system, which means there has to be a protocol that these multiple protocols can talk to each other, like Mastercard, Visa, which created open protocols for different payment systems to interact with each other. So eventually, blockchain or distributed ledger will be an open loop. It can only work if it is open loop, because there'll be multiple people who are trying to create their own version of it. So it will only work if it's open loop. But I do see a huge, especially because India is coming up with their own data privacy norm, and hence it has already come up with. Actually, it's not coming, but let's say it takes another 4 or 5 years in implementation. 3 years, next 3 4 years, the government will get aware of what it is, then we'll start enforcing.
Yeah.
5 years of it becoming a norm within industries. I think hash will become extremely relevant. In fact, the data privacy norm talks about hashing, that you need to hash PII before keeping it. Nobody is doing it today, but yes, it needs to be done. The second, it talks about protocol to share data with consent. I don't think it's possible in traditional data networks. It can only be possible if you create some form of distributed ledger. So I do believe distributed ledger and hash protocol, two things because of data privacy, and especially the banking industry, which deals with only person-sensitive information, which is PII. Post data privacy, I think distributed ledger and hash protocols both will become almost mandatory for any financial institution.
All right, that's quite interesting. I think we can take one last question. So this is more like a market-based question. So it's about what role do you see for price comparison websites to offer non-price elements for comparison? So for example, if someone's comparing bank accounts, then those offering remote KYC or level security, etc., would their product get more traction in the market as opposed to someone who's not offering something?
I'm not clear so much with the question, to be very honest. But if the question is whether remote KYC as an addition to a marketplace model makes sense, I think the question is obviously like it's a feature. It's like does a chatbot improve my conversion rate? It may. Does a better UI UX? Yes, it will. Right. So I think it's a feature like any other feature. There can be 10 things which will improve. This is not I think remote will. The only challenge is that unlike other features, KYC is something which the bank has to do. Necessarily, the bank has to do. So while you can create a connector in a marketplace, but eventually the entire technology to onboard and KYC will have to be run from the bank's own infrastructure, and hence that is a tricky thing to solve for a marketplace.
Right, right. All right, great. Thank you so much, Arpit, for taking out the time to come for our webinar and speak to all of us. I think this has been a very interesting discussion with respect to digital payments, and we hope to see Signzy coming up with some good innovative products in the coming months, taking advantage of the COVID-19 scenario. Aparajita, if there's anything you'd like to add on a concluding note.
No, nothing. Just thanks, Arpit.
Okay, thank you, everyone.
All right, great. Just before we drop off for the day, so we are holding another webinar next Friday, which is on 8th May, and we will be discussing the Supreme Court's cryptocurrency verdict and what are the implications of that verdict for the industry at large. Basically, we will talk about how the case shaped up and what it means for the industry going forward. We will also we were involved with one of the parties in that matter, and we were involved in that case. So we will have one of our lawyers who was present in the courtroom who will also talk to you about their experience and how the proceedings were there. So we look forward to having all of you again next week, Friday.
Thank you.
Okay,
All
thank
right.
you.
Thank you,
Bye,
everyone. Thank you so
everyone.
much.
Bye, bye. Thank you.
Thank you. Keep following our LinkedIn page for further updates. Thank you.